On Wall Street, you're only as good as your last trade. So what happens when you make a bad one? Scott Minerd is in charge of guiding investment strategies for Guggenheim Partners, which oversees $325 billion. He also leads research on global macroeconomics. Here's his big money mistake.
One of the most difficult things I went through in my life was the period right out of college. I moved to Fort Lauderdale, Florida. I was working for Price Waterhouse, and it was 1980. And real estate prices had been skyrocketing in Florida. And so I wanted to get in on the real estate boom. And so I managed to scrape together everything I had, and I found this condominium that I could just get into. And I bought it. And of course I had a big payment.
How much were the interest rates?
At that time I got a special subsidized mortgage, which was 9 7/8%.
Ooh.
Right, and that was low because most rates were like 14 or 15 or 16. And I thought I was getting my foot in the door, but it didn't take me long until after I closed, which probably was a few weeks, when I started to have second thoughts.
Why?
Well, it just, something in the pit of my stomach didn't
So it was
seem
first a
right.
gut instinct.
It's gut, right? But of course this is a sure bet. So, just ignore it.
That was the prevailing wisdom at the time. Real estate, you can't go wrong.
Oh, especially then, because this is the heyday of inflation. It had been like the number one performing asset for at least 5 years.
When did you realize that it was a mistake?
Well, you mean fully a mistake?
Yeah.
Because it was about a week after closing I started to have second thoughts. I began to realize, as prices began to soften and decline and sales were going in. And curiously, as an auditor, I was assigned to Cadillac Fairview. It was the largest real estate developer in the world at that time. And they had made a fortune in '79 on a project in Miami Beach. They sold out the entire high-rise in half a day. 2 years later, there's concern that they're stuck with a lot of inventory. There was a cover story on Fortune magazine called Getting Burned at the Beach.
Not a good sign.
No. And so they decide they're going to prove everybody wrong, and they're going to hold an auction, and they're going to sell everything. And the way it worked is whoever the highest bidder was got to pick any unit they wanted. He could pick up to 5. So this young guy, must have been in his 20s, who was Venezuelan, bid like $2.5 million. And I get a nudge from the CFO, and he points down the row. And I lean forward and look down, and I see the CEO of Cadillac Fairview linking forward, giving me the big thumbs up. Right? Within 20 units of bidding, the prices were at $50,000. There were literally thousands of units for sale.
So was that like 10 minutes, 20 minutes later?
Yeah, just absolutely. And of course, right, the guy who was, wanted the absolute best unit was going to bid whatever to make sure he won.
Yeah.
And, all the bids completely faded. And I learned a lesson that, not only was I stuck personally in a piece of real estate that wasn't worth what I'd paid for it, but that real estate was was a very volatile asset class, and that the old adage that real estate always goes up was, one of the great lies.
So tell me more about this apartment in Florida. What was the name of the complex?
I can't even remember.
Was there a view?
No. I mean, yeah, you could see swampland. I mean, there was nothing around us. There was this, sort of irrigation drainage canal that ran beside the property. And
so not picturesque?
No, the alligators would crawl up on the lawn from time to time. And
what was the listing price?
I think it was $54,750. You remember this when you suffered through something.
That's very exact. And you said your monthly payment on the mortgage was?
It was about $600.
And your annual salary at the time was only?
$15,000.
Okay.
That was the mortgage and taxes. I started to feel like a captive, that I was a prisoner to the place. I couldn't. It wasn't like, if I decided I wanted to change jobs or move somewhere, I was tied down with this property.
So this is something that is recurring because housing markets go in cycles, and
Right.
including at this moment when housing is doing very well.
Right.
How did you extricate yourself from this real estate investment in Florida? Like, does it end with a happy story?
No.
No.
it ends about almost 20 years later.
Well, you held on to it from 1980
Well, it's going to come back, right? And I rented it, and
did you make money on renting it?
No, right? Because by the time I had the maintenance and the whole bit, and of course I had reached for the only thing I could afford, which wasn't going to be the creme de la creme. Location. That had everything going against it.
It's what I could afford.
Yeah, and so it was actually in the probably around 2002, 2003, I finally sold it at a loss.
2002, 2003, this is after you retired, unretired, came back to work at Guggenheim, was leading the firm. That's when you sold the apartment at a loss? Right.
Well, it's going to come back. So,
wow.
By the way, what's really funny is when I sold it, I was like, look, I could see the dynamic that was starting to develop in real estate. Mm-hmm. And I'm like, this thing's going to take off again. And it did.
So you sold it right before it took off? Or?
Yeah. But the thing is, I was just so disgusted with dealing with it. And somebody approached me and wanted to buy it. Mm-hmm. And I'm like, I just want out.
Did you make a phone call to anyone about this? I mean, did you tell anyone about this experience, or were you?
No, I was hiding.
You were hiding?
Well, I was embarrassed. Mm-hmm. My family saw me do this. Everybody saw me do this. Mm-hmm. And I'd actually gone to my grandparents to get some of the down payment. And when I got the proceeds from the sale, and I had positive cash, I sent it to my grandmother. Then I said, I'm paying you back the money I borrowed for the condominium. And I couldn't convince her that I'd lost money.
Really?
Well, it had been so long, and
she was like, "You clearly made out better."
Oh yeah, you're such a smart investor, and the whole bit. So I'm like, but it's like really begging her to believe me. She never believed me. So.
Is this something you think you could have learned from a textbook or from someone telling you, or did you have to experience it firsthand yourself to really understand that real estate can go south?
I think, it taught me a lot about the usefulness of history. Because Florida, South Florida in particular, is notorious for real estate booms and busts going back to the 20s. And so, it probably affected the way I looked at all investments going forward, which was not to just listen to the conventional wisdom of what everybody else was saying, but to take what they were saying and, actually, really in reality, challenge it. Anytime I hear people say that something is a foregone conclusion,
alarm bells are going off in your head.
Yeah, exactly. And I start looking at it and seeing what it is. And, candidly, we're going through one of those periods right now where it's a foregone conclusion that inflation is here to stay. And, I'm not quite buying into the story. We're having an inflation spike, but, that's the foregone, that's the conventional wisdom.
How often are you reminded of this?
Of this specific thing, not too often, but the general idea a lot, because it's I think prudence in investing, prudence in life, have some real value.
Even if you miss out on some upside in the meantime.
You know what? There's always a bull market somewhere. If you start into the world of I'm missing out on something, it's FOMO. Right, and so we've seen a lot of FOMO in the last year or two, and as I sold somebody the other day, my personal investments are, like most people, down at this point. But the number, if I told you, relative to my net worth, is pretty de minimis, because whenever I see FOMO, I kind of say, maybe it's time to move
go in the other
cash.
direction.
Yeah.